Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Thursday, June 8th, 2023. It's now the 7th. We start off in the S&P 500 daily chart in DeMark looking back to end of December 2021. I'll zoom into the current area now. First off, the S&P 500 daily chart nailed the upper Bollinger Band again. It actually exceeded it a little bit and then sank like a rock. The channel 3 high is above the upper Stark band, and Thursday will decide which way the S&P 500 will go, as the daily chart has printed the combo and sequential sell setup 8 count. And to negate that for end of day on the 8th, there must be a close below 4282.37 for the price flip to the buy setup count 1. So price could very well start the day with the price flip, and it has the rest of the day until the close to get back above this close level here. And to the upside, there's a new ongoing supply line, which for the 8th starts the day at approximately 4303. And it looks like the previous qualified and confirmed supply line was canceled. It looks like after the confirmation bar here, there was downside, so that got canceled out, along with the qualified supply projection up in the 5,000 zone. So get this one qualified and or confirmed, and there'll be another supply projection up in the 5,000 zone as this supply line goes back to August of 2022, so anchored at the high of that August high. And the longer the supply line, but this is the level to watch for tomorrow all day. It needs a close above that close on the 2nd, and that will tell which way the market will go, in my opinion. So we get a 9 end count, and I see more upside. We don't get it. I see downside. And also, here's the S&P 500 daily chart with the ranges in light blue. You can see the range we're in now, 4305.31 at the top and 3800.16 at the bottom. We're going to zoom into this area now. The S&P 500 50-day simple moving average in black right here has been at 39.7514 for 3 or 4 days now. So that will be another telltale sign of market direction, which way this breaks. Will we get a bump up in price on this 50-day simple moving average, or will there be a down price in conjunction with the 9 end count in DeMark? So that will be interesting to watch those two. So watch the 50 simple moving average and the close. Here again in DeMark, 4282.37 needs to get above that and close above it. So to the downside is the Stark band, middle band, which is a 9 simple moving average at that level. Then the Ichimoku conversion line, which is a 9 EMA at this level. Break down through that, and the trend factor disqualified down 1 is there, along with the lower Stark band, the baseline, and channel 3 low, all in the same vicinity. So that will definitely be good support, and all of that is protecting the disqualified momentum down for 50%. And disaster strikes and get a close below this ongoing demand line, which for Thursday on the 8th will be at 4109.03. and that will get qualified with a close below that level. And here's a look zoomed out a little bit. The NASDAQ 100 Big Fat Cap Balance Sheet Extraordinaire powered by AI Megatech Index. I'll zoom into the current area now. So this blob of candles here, including the gap here, looks exactly the same as it does in the XLK cap weighted index. This is the equal weighted. So the bottom of this gap zone is the high of this candle at 73.59.96. And the 20 simple moving average in solid blue here is at 73.10.59. So this might be a good opportunity to buy if it makes it down to this level here and fills this gap. Zoomed out so you can see it has reached the 50% and 100% target here after blasting out of this one-sided diamond bottoming pattern here, and the DeMark relative retracement 0.382 level was qualified and confirmed. And the next level for that is the DeMark relative retracement 2 at 0.618. And I'll have to correct myself from the last time we made this NDXT video. So coming out of this one-sided diamond bottoming pattern to rise 39% from where it broke out here takes approximately 6 months. So it looks like that broke out around the middle of January. So let's give it to the middle of July to see if it can make it up here. And if it does, what this means over here is that the S&P will usually rise about 11% if it makes this 39% for the NDXT. The NASDAQ 100 NDXHILO chart did have the crossover of the blue 5 EMA above the red 10 EMA for another buy signal. And this period here, and you can see all the arrows down here, will be history in the future to look back on. So a down day tomorrow will pretty much guarantee that this will more than likely reverse and the blue 5 EMA will go back under the red 10 EMA. And I will short a little bit more. The short, intermediate, and long-term KSTs look exactly like they did from the previous video. Maybe the short term is trying to pull back on the stick a little bit and head back up towards zero. And the NASDAQ composite and NAHILO looks exactly the same as it has for the past week or so, or even longer. Just an incredible rainbow pattern, 5 red and 21 blue here, nicely spaced here. So, and shows no indication whatsoever of rolling over, and really no change since the previous video on the KSTs. Again, the short term, just like the NASDAQ 100, looks like it wants to pull back on the stick a little bit, but is pretty well in a downwards trajectory. And the New York high-low has had the buy signal the other day, and it's looking pretty good there. It looks like the red 10 EMA has yet to get above the gold 21 EMA. The red is at 42.71 and the gold is at 43.07. And the short-term KST over here definitely had a nice hook around, is now back above zero and above its signal line. It's looking really good. Now we wait for the intermediate term to get back above zero, as it has crossed above its signal line below zero, and the long-term KST needs to wake up. It is definitely sleeping under zero at negative 62.81.